From this moment forward, Indian goods arriving in the United States face a punishing new reality, a 50% tariff. What began earlier this month as a 25% tax has suddenly doubled overnight. The White House says the move is retaliation for India's continued purchase of Russian oil, defying Western sanctions and, in Washington's view, undermining U.S. foreign policy. Clothing, jewelry, footwear, sporting goods, chemicals, entire industries that once flowed easily across borders, are now trapped in the middle of a spiraling economic war. In a stunning announcement, President Trump declared that India, a nation considered a key strategic partner for decades, would be treated as an economic adversary. He accused New Delhi of crossing a red line by becoming one of Moscow's largest energy customers, second only to China. With a stroke of his pen, tariffs doubled from 25% to 50%, sending shockwaves across both nations. The impact was immediate. Trade worth nearly $87 billion began to unravel. Critical U.S. drug supply chains, long dependent on India, broke under the pressure, forcing families to pay 20% to 40% more for life-saving medications. What seemed at first like a geopolitical maneuver was now a crisis unfolding inside American households. This is no routine trade dispute. Economists are calling it an economic declaration of war. And the numbers reveal just how deep the wound could go. Analysts estimate the U.S. economy could shrink by as much as 8%. Wages could fall by 7%. And for the average family, the hidden tax of this trade war will add up to about $1,300 in new costs this year alone. But India did not retreat. Instead, it launched a counterstrike unlike any Washington has seen before. Rather than mirror U.S. tariffs, New Delhi turned to precision economic warfare. It restricted exports of generic drugs and pharmaceutical ingredients, hitting America where it hurts most, its medicine cabinet. Overnight, shortages gripped U.S. pharmacies. Antibiotics, insulin, heart medications, the everyday essentials millions rely on, spiked in price by more than a third. Next, India leveraged its greatest strength, its vast technology workforce. U.S. companies that had long relied on Indian engineers suddenly faced higher costs as Indian IT firms raised their rates. At the same time, they offered discounted services to European and Asian clients, slowly pulling business away from Silicon Valley. Then came the blow to American farmers. India cancelled billions of dollars worth of agricultural orders, corn, soybeans, wheat, and shifted its purchases to Brazil, Argentina, and Australia. In the American Midwest, the effect was devastating. Prices for crops fell, farm incomes plummeted, and small towns that relied on exports felt the sting almost immediately. But India's most powerful move was quieter and more strategic. It began conducting more trade in currencies outside the US dollar, rupees, yuan, dirhams, and joined alternative payment systems beyond Washington's reach. Wall Street banks, which normally profited as gatekeepers of global transactions, saw billions slipping away. In slow, deliberate steps, India was eroding one of the pillars of American economic power, the dollar's dominance. By late August, it was clear. This wasn't just about tariffs. This was about the future of global trade itself. The irony is hard to ignore. For years, Washington actually profited more from India than it lost. When services, investments, and royalties are counted, the US ran a healthy surplus in its relationship with New Delhi. By starting this war, America jeopardized one of its most profitable partnerships. And the rest of the world is paying attention. Allies in Europe, Asia, and Africa now wonder, if the United States can turn against India, could they be next? The result has been a surge of interest in BRICS, the bloc of emerging economies, Brazil, Russia, India, China, South Africa, now joined by others eager to escape Washington's shadow. Together, they represent more than 40% of the world's population and are pushing for a new, gold-backed currency to challenge the dollar itself. For the United States, the consequences are already visible. Drug shortages, higher prices, shrinking markets for farmers and tech companies. For India, the crisis has been a chance to demonstrate resilience and signal that it will not compromise under pressure. Decades of carefully built trust between the world's largest democracies have unraveled in weeks. And the question now is not whether the damage can be repaired, but whether the global economy has already crossed a point of no return. The trade war is here, and what happens next could reshape the balance of power for an entire generation. This is True State Report. Thanks for watching. We'll see you in the next video.